Welcome to my channel, guys. This is my first video. I'm going to go over a lot of you guys' questions and strategies you guys have asked me through DMs, and I'm just going to go over everything like that. Disclaimer, I am not a professional day trader. I'm not a professional stock trader. I am still learning. I'm still on the journey of trying to become consistently profitable, this year, honestly, 2020, I have seen a lot of green days, and fortunately enough that I'm seeing improvements. So the first thing I've been asked about are levels, and I like to use levels that help me show where stocks are weak and where the sellers are at and where the buyers are at. So what I usually do is I like to chart my stocks the day before or even just Sunday night, get all my levels ready for the stocks for the week. So I'm going to start with Tesla. What I usually start with is I start with a further time frame. It helps me figure out, it's a cleaner move, and you could see clearly where the stocks are moving and how it's reacting. So Tesla here, obviously this one's a little bit more difficult to chart due to the massive explosive push up it's had since December. I mean, if you could see from this summer, it was trading at 176.99. It reached a high of 968.99. As you can see here, the sellers just flush this thing down. So what I would usually do is I like to focus on where the stock is currently at now. I mean, I could chart here, but I don't really see the stock coming all the way down to $176 soon. So I'm going to zoom in here. And I like to just go from left to right. So from here, I would probably chart, the first level would be the 700 level. As you can see here, the stock bounced off this level. It also bounced off here. And 700, I would put it at 700 even due to the fact that that's just the psychological number. People want to see the stock touch that number. They want to see the stock bounce off this number. You know, just a lot of pivot points are going to be done at these big psychological numbers, 700, 800, 900, and then 1,000 is going to be a really big one. I can't wait for Tesla to cross that. So usually on the 1 year, 1 day, I don't like to go crazy with these. So my next one would probably be around the 820s. As you can see, stock gets rejected here, rejected again. Almost close to retesting it, doesn't get that close. And then this February 5th candle, it pushes right through to it, which touches both of our levels. I then like to move on to the 4-hour, 180-day. This helps give a clearer picture. As you can see, this 818 level this was perfectly plotted. As you can see, rejected, 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 rejected. Finally broke through pre-market today, and now Tesla's on a rally. It's even up after hours too. So Tesla's gonna be a nice trade tomorrow. Honestly, for here, I wouldn't chart anymore because, as we could see, we found the two main levels. Usually at a lower time frame is where I'll actually start adding more and more levels. So I'll actually start with the 5-day 15, and then I'm using Thinkorswim. This is by TD Ameritrade. I like to go to the drawing tools and I like to put on the levels. It just draws a straight horizontal line when you just click it at a certain level. So as I said, I usually start from the left to the right. So as you can see here, around the 754 area, the stock tends to bounce there. So that's where I would chart another level. I would then move on to see the high here. This was a resistance right here. 785 was resistance right here. 785 was resistance here pre-market, and tried to break through on Wednesday but failed, and the sellers pushed it right down. So the 786 level would be another one. I would then move on to look at Tuesday. You see that Tuesday stock pushed up, pulled back kind of hard to the 760s and kind of found a support there. As you can see here, it was also finding support there. So this would be another key level I would plot. And then here, honestly, I wouldn't plot anything because it's nothing major. Stock stays pretty true to this line. This big wick right here, I like to plot the 712 because this shows that the stock went all the way down to 712 and the buyers just pushed it all the way back to 730, which is honestly like a pretty big move if you're trading options or you have a big position in the regular trading stocks. So then here is where I would get kind of more in depth. I like to zoom in here. I could see that the 858 level was a pre-market high, retested it today, couldn't break through, and then near power hour today at the end of the before the market closed, it did not break through. But as you can see, after hours, the stock is moving. I would then move on to the 1 day, 1 minute. That's usually just within the day. So what I see today is I see that this 838 level has been tested once, twice, 3 times, 4 times, 5 times. So this is significant, 6 times right here. This is a very significant level, and this is what I would chart as well. And then another one would be probably around the 850s, another psychological level. See, uses this as support, finally breaks through, comes all the way down to the 838 level we marked, tests it, gets rejected, breaks through a little bit, sellers push it right back down, kind of trades below it, and then finally breaks out of it, tests this 858 level, gets rejected, comes all the way back to that 850 psychological number, and we form a hammer candle, which shows that the stock went all the way down here, but the buyers pushed it all the way back up. So that's how I would chart Tesla. And that's usually just how I chart most of my stocks that I usually trade. Another thing that I would honestly do is, you see here that after hours, this is pretty high volume for after hours. When you see a clean chart kind of, this shows that there's a lot of buying and there's a lot of interest in the stock. So what I would chart for tomorrow, and this is just kind of getting ahead, I like to look at pre-market too. I would chart this 889.68 level. This is where it got rejected. And just leave it at that and see how we open tomorrow pre-market. So next up, my next question was risk management and where to set stops. So I'm going to actually go through my trade today. This would be a clear example. So today I traded NVIDIA. I had this 289 level. As you can see, used that as support here. Stock touched this level a lot, pre-market high, and then in the beginning of the day, just kept getting rejected by this 289 level. I then saw the break with high volume, and that's what I entered. But I entered a little late on this play. I went over the whole breakdown on Instagram. I'm not going to get too in detail with that. But for my stop loss, mostly what I like to do is when I'm trading breakouts like this, when the stock breaks out and I get in, my stop loss is usually, when the stock trading at like a $288 like this, is usually 25 to 50 cents below. So if it's 289, my stop loss is going to be at 288.75 or 288.50. It's just kind of a mental stop loss, because when I know this stock does not break out and it starts going the other way and starts going against me, I know that I'm wrong and I should just get out of the position. Because when you're wrong in the stock market, you just got to get out. You can't just sit there and hope, because that's honestly where my biggest losses have been caused by. Another thing for risk management is what I've actually been struggling with too, is not going in with too much size. You're never 100% right in this market. You could have every single indicator pointing that it's going to go up and have all the chart look pretty and everything, and the stock could still just tank and go the opposite way. So my problem is I sized up hard on plays like this, and usually when they went against me, I would lose a lot, and usually if they went in my favor, I would get out way too early because I'm trading with too much, and I see that I'm up X, Y, and Z amount, and I'm just like, all right, I'm going to take my profit and I'm going to go. So I like to take it light, and if I see the play continuing, I'll add a little bit, but I don't really usually do that. But overall, just for risk management, I would just go into an amount that you're willing to lose if it would go to zero. Honestly, I mean, if you had $1,000 account, would you put $1,000 in one trade? I don't think so. Put $100, $50 around there, and then see it grow. Slow, consistent profits grow accounts. You can't just be going for home runs every single trade. The next question I had was, two quick ones. Someone asked the disadvantages versus advantages of buying plenty of cheap stocks versus few expensive stocks. All right, so let's look at the cheap stocks right here. I'm going to see Virgin Galactic. All right, this stock has been on a tremendous move. Today's stock actually pulled back very hard, honestly, as you guys can clearly see. So this stock was trading around $10, pulled back to $6. Not a lot of action. As you can see, the volume here is pretty dead, not a lot of movement. And then we finally start to see the stock push past this 1175 level and start pushing. Volume increases like crazy. That's showcasing that there's a lot of interest in the stock. The stock then breaks this 20 level and it goes up and it tests the 38.72 today and gets rejected hard. I mean, this candle, this is the biggest indicator of just get out. Honestly, if I was in this position, I would just take my profits, because people that have been holding since $20 have made a nice 94% on the high of today. And if they sold near the end of the market today, they're still up 50%. And that's impressive in a matter of 10 days. So going back to the question, what are the advantages of buying cheaper stocks, or the disadvantages than buying more expensive, maybe even blue chip stocks like those? Me personally, I don't like trading these cheap stocks due to the fact that they're very volatile. And that, you see 5%, 6%. I've seen 14% moves on stocks like these every single day. And that they just don't have much volume where you can get filled easily, you can get out, you can get in if you were trying to just enter for the first time. An example of this was BPTH. All right, this was a big stock last year. Everyone was making big profits on this. Stock was only trading at $1.84. All right, no volume. You can't even see the bars here because it's so dead. There's nothing. And then there was news came out of, I forget, they were getting an FDA approval, something like that. Stock went from $1 to a high of $73.52. All right. When you look at it now, you're like, oh, if I bought 100 of these and it went up to $73, that's a huge return. And yes, it is a huge return. But home runs like this will not happen every single time. And if you're on the opposite end of this trade, if you say you wanted to short this stock when it hit 45 and you think, all right, it's at 45, it went from $1 to 45, it's not going to go up even more. It's going to pull back somehow. And it just kept pushing up. You honestly would stand to lose 64% in a matter of one day, and that's how you blow your account. Stocks like these, all right, it's good to capitalize on small, quick plays. But holding this thing overnight, holding this thing long term, I never find values in stocks like these. And as you can clearly see, the stock has just been dead. No volume. It's just pushing down. It's going to touch the $5 range, and we'll see where it goes from there. But usually I don't like trading these low cap stocks due to the fact that they're very volatile. They can easily flush out your account. And although you can make some big wins on this, you can also make huge losses, which in this game, if you're making big losses left and right, then you're just gonna blow your account. Now, looking at a company that is expensive stock and doesn't move as much as BPTH or Virgin Galactic would be something like Amazon. This stock, quick, small moves. This stock follows the S&P. See if I pull up SPY right here next to it. That's pretty wide. Same pattern. Stock pushes up April of the 30th. Stock pushes up. This is around May, same time. Takes a huge hit. I remember this was a correction period. Same thing here. Pushes back up again. Pushes back up again. Another pullback. And then now it's on an uptrend. So this usually, stocks like these follow the market. Nice, slow moves. And in the long run, honestly, you're profitable. You say you bought it down here around the 1596 and you're holding around here, That's around a $600 profit per share. And you don't have these 60% moves like BPTH and those stocks. This is more nice and steady. And although you're paying more for a stock, in the long run, you'll become more profitable than those low cap stocks, which is personally why I just like to stay away from those low cap stocks. And then since I'm on Amazon, someone wanted to ask me what are my thoughts on Amazon, any trades or what I'm thinking about it. So Amazon honestly has been a little weak recently. The market has been pushing up strong. Amazon, as you can see, just consolidating. I'll even set levels for it right here. You see 1823. You see the 1733, and if you even want to go to the 1690s, it's just been consolidating. We see a breakout here and just kept on consolidating. Earnings came out, which finally gave the stock a boost. This is why this gap is in here. There's actually a big green candle that happened post-market after hours. And now we're on a quick push up, but now we're seeing another pullback. What new investors, what people that are just trying to come in here, just make their money and run, they're going to enter right here. All right, it's called dumb money. They're going to enter and they just want to, they see this big candle right here. They see the earnings were fantastic on Amazon and they're just going to enter. No research, nothing. They just see that this big candle. They're like, all right, this is going to keep going up. That's wrong. There's fundamental and technical analysis. All right, technical analysis is the levels, the looking at the charts, seeing what it's showing you. Fundamental is actually looking at the company's outlook, their guidance. You can even look at their conference calls. You can see people even go and see the balance sheets of these companies to really see what they're worth and if their stock's gonna keep moving up. For me, I like to use a combination of fundamental and technicals. And for Amazon, honestly, I would like to look at the 180 4-hour. As you can see, stock pushed up after the earnings, pulled back from 2,093. Again, the stock breaks out, gets rejected by this 2185 level, and now it's starting to consolidate again. As we could see, the stock was consolidating before earnings, no big moves. Me personally, I would not buy Amazon until I see a strong break of 2185 and I see that some news or some big article comes out of Amazon either getting an upgrade by an analyst, or we see some strong article about how Amazon is hurting other retail companies, Walmart, Target, their biggest competitors. Because at the moment right now, we could easily see Amazon break this 2092 level, come back down to the 1800s, and just consolidate there again. It's been doing this the past since July. All right, July to February, just consolidating, no movement, no price action. So what I would wait for is a break of the 2185s. If it pulls back, I want to see it hold. I also want to see a strong catalyst showing that Amazon is going to trade higher. If not, if we see no upgrades, no big news catalysts about Amazon and its retailers and its competitors, Walmart, Target, Bed Bath & Beyond. I mean, Amazon has been killing Bed Bath & Beyond. If you look at Bed Bath & Beyond stock, what is the... There we go. Very, very ugly price action. All right. Reports earnings, stock tanks. Tries to pull back again. More news regarding Amazon just taking it out and killing the market. Bed Bath has been really struggling the past year or so. So that's really much it. That's what I'm looking for in Amazon. I mean, I wouldn't jump the gun yet and take a trade on Amazon. I would like to wait for something. And overall, as of now, I would just wait on the sidelines on Amazon. I wouldn't go in. I mean, there's plenty of other stocks that I recommend. CRM. I don't know why my TD Ameritrade's lagging right now. CRM reporting fantastic earnings. Finally broke out of this 165 key level. Pushed up hard. rejected by its 186, and now we're seeing it hold, and now we're gonna possibly see another move up to the 200s. Another one, Costco. I've been looking at it too. Costco finally broke past this 306 level, breaks it, gets rejected around this 314, and now broke the 314 level, and now we're seeing a nice push up on Costco. So just stocks like these, just do your own research. Look at the charts, read the news, and you'll find good picks. So just stay green, guys. And thank you for watching my video, and I look forward to making more soon.